Hello and welcome everyone to our live event today, which is sort of like a tax trivia with a Melbourne Cup theme. If you can't tell already, today we are horsing around on equine related tax issues. All right. Our instructor today is Lisa Gregg. She's the principal of Perigee Advisors and is a fellow public accountant and tax advisor, a tax agent and tax advisor, specializing in private groups. And she also teaches tax law at several universities. Please put your emoji hands together to welcome Lisa Gray. Welcome back, Lisa.
Thank you, Joyce. Cheers.
Oh, you're all decked out. Very, very wonderful.
I am a very, very proud Melburnian, Joyce. You know that. It's fed into the spirit of what we're trying to do today on a quasi-public holiday.
Yeah, good on you all to join in on the guilt-free fun.
Exactly. Some people are still working out there, but some people will definitely be taking the day off. So they might just have to get it on record.
Mm-hmm. Right, let's move on to the agenda. What's on today?
That's what we're going to cover today. So look, it's very lighthearted. We're going to have a lot of Slidos. So we're talking about tax trivia. So I'll tell you a few stories and things like that about things with the GGs. But we're going to take you from, can I say paddock to plate? Maybe not, because we don't actually eat them, but maybe we could say that in terms of the entertaining bit. So we're going to take you on a whole journey, looking at what's happening out there on the farm and then going through what's happening on the track. And so without further ado, let's get stuck into it. So at the paddock, so we're looking at running a racing business, or you're running a training business, or you're running a breeding business, or is it an agistment business? So all these things are very much around, is it a business or it's a hobby? Because we know that a lot of people really love the punt and they really love betting on the GGs, and it's got that real lifestyle component to it. So what we're talking about is, are you conducting a business or not? So let's just recap that to begin with, business versus hobby, because that's going to have a big bearing on the tax attributes. So it's a question of fact and degree, and we've got some factors in that tax ruling, 9711, which of course comes from all those wonderful cases that we probably know and love, and we probably remember if we go back into our depths of education with Ferguson and Stone. And of course, we all love Walker and his one goat, which always made us very, very funny about it all. So we look at, is there a commercial purpose? Is there more just an intention to engage in business? Intention is very important. Are you trying to make a profit or not? Are you doing it regular and repetitive? We're looking at what kind of business is it. Does it smell like a business? Does it look like a business? Have you got systems in place? You're running the good old Excel spreadsheet or using MyOb or Xero or little QuickBooks or something like that? Is there some permanency with it? Have you put some skin in the game and things like that? Have you bought assets? And is the activity better described as a hobby or a form of recreation or sport activity? And that's sort of where we're starting to venture in with what we're talking about, these horsey activities. And the other really important thing to put as an overlay on this is, for different industries, it can look very, very different. So a share trading business compared to a professional sports or the creative industry could be a little bit different. And we're going to look at that a little bit later on in the hour as well. So what about a horsey business? What about if you're looking at breeding, training, racing, or agistment? What of these attributes specifically to a horsey business could it potentially be an indicator, a factor, a question of factor degree, running a business of that ilk? So here's our Slido. So Joyce, you're going to give them instructions, or do you want me to with the Slido? QR code the Slido and fill it all in, everyone. This is what we're talking about.
I'll give the instructions so you can take a break and sip your champagne. Your kombucha. So what attributes do you think are the most decisive when it comes to a horsey business? We've got several options there for you. Scan the QR code to join, or the link is in the chat. Feel free to participate, people. We've got about 300 of y'all here today, so don't be shy. And answers are all anonymous, so we won't pick on anyone.
Exactly. And it's just more what you think's going to be more decisive than others. What's going to be the real, deal breaker with it all? Because it's a specialized business, isn't it, Joyce? It really is.
I like the first one. I think that could be a factor. Certainly a factor that is unique to this business, not anything else.
You've got the breeding aspect as well. Genetics is a game of luck to some extent as well. Like, I love dogs. And so, you start breeding oodles and you go, is it too much poodle or too much cab or Bichon or Maltese or something? So sometimes that's a game of luck as well.
All right. We've got 40 of y'all that have participated. Thank you so much. Let's see what everybody thinks. Ooh, profit-making intention is very high up there.
And it's a bit that way. But remember, if you're running a business, you can just try and make a profit. But what happens if you've had 10 years worth of losses, Joyce? I mean, that's,
common in a horse racing business.
Very, very common in the horse racing business. Systematic and organised. I'm happy that that's coming up there. Paying for betting software, that was interesting because that came up with my reading for this to see where it goes. Not based on like our chance was quite low down. So it's not interesting. So is there still an intention to make a profit? And of course, that's subjective.
And there's the one factor that decides it, right? It's just on balance. You weigh everything up.
Correct. That's what, and that's where, and it's very much industry specific how it works. So they're the factors, but some will be more likely than others. So I just thought it was interesting that it's still about profit. And that's probably because we're putting on our tax hats and saying, well, that's what you're going to pay tax on as well. So what does that mean? So if it's a business, of course, 6-5 assessable, 8-1 deductible. Makes sense? If it's not, oh, sorry, gone. The response is, there we go. Right, there we go. If it's not a business, of course it's not. And as there's a lot of loss making in these horsey businesses, do you want to be able to claim a loss? And then can you offset that loss against other income, Joyce? So that could be a bit of a issue with that profit-making intention. Have you made profit as opposed to are you trying to make profit? So when it comes to horses, what sort of tax asset do we think horses belong to?
All right, people, let us know what you think. What tax asset do horses belong to? Is it CGT, trading stock, depreciating asset, or it depends? And it is a spectrum, isn't it? You've got, what is it? Trading stock at one end, and then depreciating asset in the middle, and then CGT at the end. Is that right?
Yeah, so it comes down to if it's a business or if it's not a business, and then what do we do with this big, hefty, four-legged beast, which could be from breeding, could be from training, could be from agistment, it could be all those things that we've been talking about earlier. So it's absolutely perfect. We've got some clever people. I'll give the champagne or the betting slip to those people. So there's the business. There's not a business. So if it's not a business, your horses can't be trading stock, can it? And the horses could be a depreciating asset, but no deductions if there's no link with it for Div 40. So where does that leave us? There we go. So this is a nice table to look at the three tax attributes and when do you need to consider them and when do you don't. A horse not used in carrying on a business could be CGT, could be depreciating asset, but not trading stock. A horse that's not livestock of a primary production business and not traded, we're looking at CGT or a depreciating asset, so it's not traded, not livestock. But if it is livestock of a primary production business, then you've got CGT aspects, but as well as training stock aspects. So if you're not carrying on a business, what do we need to worry about? If the horse is wholly for a taxable purpose, then depreciate it. If the horse is used wholly not for a taxable purpose, then we better think about capital gains tax. And remember that they're a personal use asset, which means that if you get the GG for under 10, disregard, you can't claim any capital losses. And the other thing that I thought was interesting, was that if non-residents, it's not considered taxable Australian property, a horse. So no capital gains tax for non-residents.
Mhm.
So Joyce, question for you. We're talking about depreciating assets. What do you reckon the Commissioner's effective life is for horses?
I have no idea. Is it like a dog, 7-year human life kind of thing?
That's what sort of horse it is. Fred, they say it's 5. If it's
Really? Oh, okay.
if it's a harness race, the trots, they say it's 7. If it's the jumps, they say 10. And if it's a beast of burden, it's 15 years.
Oh, wow. That is quite
Difference. I always think when you watch them, and they've reduced the jumps races now, that was when we always were a bit sad because they could always, break their legs on jumps and things like that. So, yeah.
But it's sad also that thoroughbreds are only 5 years. Yeah, like that's the peak.
Well, that's all they last for. One of my colleagues is heavily into horses, and I said to her, how old's Dino? How old's your horse? And she goes, oh, it's 20 years this week. And he's had a lot of trouble about it. But, she show jumps and does equestrian, and I always call it pony club that she hates. But anyway, so let's move on about how these different businesses could operate. So if we're looking at racehorse-only businesses, so we're going to break it down into the different types of subcategories of business that we're talking about the Paddock. What are the characteristics of carrying on a business of a racehorse-only business? It's unlikely where there's a game of chance. It's an element of chance, which is what you highlighted, Joyce, earlier. The activities are no more than a mere pursuit, so it smells more of a hobby or a pastime. It's going to be overcome by having systems in place, records, substantiation, that prospect of profit, which was really popular in the Slido, a question that we gave. And there's a reasonable expectation that it's commercially viable. For commercially viable, it's got to actually make a profit, just not in intention. So that's for horse racing only business. Then with training businesses, we're talking about, Chris Waller and Godolphin and all those sort of places, all those organisations that do things like that. Well, then we're looking at the normal business factors. But of course, they just don't do one of these. And in the ruling, the guidance from the ATO, they're saying, well, if you're doing owning and breeding and training, we're looking at which activities are more integral. What's the linchpin of that business and how does that work? So breeding's the one where you're looking at potentially primary production, and you can get some primary production advantages, tax advantages with that. So we're looking at the quality and the number of the horses. We're looking at selling stock at yielding sales to generate cash flow. So they're really operating it like a business. The mares are being serviced, so they're going to make little foals and things like that. So that's the nicest way I could put it. This is from the ATO's document, Joyce. I've tried to keep it very, very upmark.
I love the euphemisms.
Yes. Using their stallion rights. So the stallion try to do something with the mare. We're all good with that. With geldings, having barren female horses, because we're talking about that natural attrition, a natural increase, aren't we, or natural attrition as well, because things don't always go well. So remember, with a primary production business, and this breeding businesses do classify for that, because under the definition, we're maintaining animals for the purpose of selling them or their bodily produce, yes, accessible income, and there'll be livestock and trading stock provisions will apply. So we haven't gone into too much detail because we're only talking about this for an hour or so. So let's try an example of a breeding-only business carrying on primary production. So Harry's currently got 25 horses on hand. Most of these horses are not from quality bloodstock and have so far showed limited potential on the track. 4 potential brood mares have been identified for late breeding. There are 2 brood mares on hand, each with a foal at foot. One is a colt and one is a filly. I hope we're all good with genders. Harry,
what is it again? I've forgotten. Maybe I never knew.
Harry intends to race the foals from these brood mares. So the horses that Harry offer for sale are those horses that he has raced that are nearly at the end of their effective life on the racetrack, because we talked quickly about that as well. So we're talking about 5 years, and are found to be unsuccessful and of limited ability on the track. His most successful horse on the racetrack has never been offered for sale. No progeny bred from his own horses have been sold. So we're talking about, is Harry conducting a breeding business, carrying on a primary production business or not?
Very good question. So what do y'all think? Is this a breeding business, or is it just a hobby? I'll give people 10 seconds to vote. Quick. Scan the QR code, or link is in the chat. So you can keep your browser open, and then the next quiz will just keep refreshing. All right, let's see. 30 of y'all have answered. What have you said? Yes is the answer, but it was literally 50-50.
No, it's no. No's the answer. Sorry.
Oh.
Yes. Oops. No's the answer, but it's 50-50. So no is the answer.
It's not carrying on a business.
No, it's not carrying on a business.
Wow, okay.
Yeah, and the reason being that he hasn't got the substance. He's only got 2 brood mares, and really his intention is to, if you listen through the story, his intention is to race the foals. Okay? So commercial sons usually spend more time with fillies and really developing things. So he's really got a high risk strategy to retain and race the fillies. So Harry's just not, he's been making losses and things like that if you read on with the story. So that's what it is. So he's not really doing it. So the right answer is no, he is not conducting a breeding business, because he's just being opportunistic really with the actual breeding side of things. So you can't be running a primary production business if his main goal is really to race.
Yep, understand.
Yeah, excellent. Okay, so let's move on. So now we've got stallion syndicates, which I thought was quite an interesting thing, because we're talking about you want a good stallion to be able to service the mares that you've got. So this is how it works. Stallion syndicates are 40 or more shares. So you've got 40 or more people that have mares that want to get serviced by the stallion. And those shares are offered for sale to the public. This is the game of chance that we've been talking about, Joyce, right? It's important to look after the stallions on behalf of the buyers, is usually. The manager generally incurs all costs of the horse, such as feeding, vetting, stabling and advertising, etc. The manager receives a standing right. So he gets a right for 6 free stallion services a year. So that's how he gets paid, like a bartering system. The members are bound by the syndicate agreement. So there's an agreement in place what they can and can't do. The stallion manager acts on behalf of the collective syndicate members and attempts to sell stallion services to other horse breeders. And of course, he could sell his 6 rights as well. But that terminology is called overs. So it's basically saying what extra can you use the stallion for?
Oh my gosh. And I thought arranged marriages were hardcore.
Yeah, this is very, very serious, right? Well, you know, the foals for black caviar and white fever and all those sort of things is very, very, it's very expensive, yearling sales and things like that, Joyce. So the manager bears all the costs and the syndicate receives the gross profit from the sale of the overs. So that's what happens, the extra. Sale in a stallion entitles the mare to be serviced free of charge each year. That's the purpose. That's the real purpose of why they're in these. And the service right might be sold each year. So the question we've got now is, it smells a little bit like a partnership. Could it be a partnership?
That's so interesting. I'm learning heaps, Lisa.
We don't expose the partnerships very much anymore. Joyce, Vicky and I were talking about with Zero to Me Hero as well, that, partnership, I only do a couple of them. I don't even have many in my portfolio of clients at all now. So, but it's really good to remember, because we actually do a lot of them. Because remember, rental properties are a partnership, but people just forget about that. They think we don't lodge a partnership return. So what's the story with this stallion syndicates. Plus, it was quite a fun one to talk about.
Certainly, definitely got a trivia aspect to that. Now I can tell everybody I know what a stallion syndicate is. All right. All right, we've got about 30 people who have voted. Let's see what they've said.
Yeah, exactly. I love this group. Everyone's very, very practiced tax people. We need more information, Lisa. It depends. So let me try and help you out with it all. So partnerships or not. So remember what the definition of a partnership is. We've got the difference between common law and tax law. Partnership, an association of persons carrying on a business as partners with a view to a profit, we know that, or in receipt of income jointly. So the stallions owned by the respective owners in the partnership, they lend their share for the overs. Only partners who are conducting a horse breeding business can claim deductions in that case. So remember, if you've got the mare, you're running the breeding business, you might be part of a stallion syndicate as part of the business activities, which makes sense. So it's not going to be a partnership if all you're doing is saying you're controlling the stallion to service the mare that you've got, right? You're not actually conducting a proper breeding business. So Harry might belong to a syndicate, but he's not doing a breeding business. He's only being opportunistic. He's not using it in a systematic way.
Mm-hmm.
And remember, the tax law partnership, stallion is used to obtain service fees split amongst all of the syndicate members, and you're in receipt of income jointly, exactly the same as mum and dad and a rental property, Joyce. That's sort of how it works. Now, the interesting thing with this is the timing. With just one more thing. The breeding and the racing syndicates in partnership, the stallions and the mares that can be owned by the syndicate, members are carrying on a business as partners. Okay, so proper breeding and racing syndicates, that could be the case. But the interesting one that I thought with this was the timing of income. When is it derived? Thinking about it? Income from the sale of stallion service fees is generally accessible when the stallion owner invoices the mare's owner. When does that happen? Positive pregnancy test. And Arthur Murray. So you thought dancing pre-wedding was really fun? Well, this is where Arthur Murray can come into it. We like the trivia. And look, that's all in Tax Ruling 9326. So in all these slides, you can go into more detail. We just thought we'd take a flutter around the taxing of horses and that.
Just quickly going back to the horse racing syndicate, because we do have two questions around that.
Yes.
So you mentioned it's a partnership, but I just wanted to clarify. So Debbie has asked, what if you buy a share in a horse? Groups of people pulling together to buy into a horse. Is that a partnership?
It's tax law, don't you?
Yeah.
Right. I think I would say it would fit exactly. Think about it. It's exactly like owning property, isn't it? It's a CGT asset. Yeah.
Yep. And then Simona has asked, can an SMSF have shares in a horse racing syndicate?
I don't know about that. I think you better check with your auditor. Could that be it? I remember years ago, everyone had to get their vintage cars out of their SMSFs because remember, you can't use them yourself. So it could be very interesting in terms of the sole use purpose of an SMSF. So I think that's belonging to an SMS auditor question to see whether they'd let you do it or not. That's usually my answer with SMSFs, Joyce.
Oh, good. Moving along.
And moving along, let's have a look about so this was from a private ruling and another quick trivia. This is meant to be trivia questions. We're doing a lot of Slidos. So unit trust, horse ownership through a unit trust, which sort of talks about could that unit be held by an SMSF? Just double check that one, as I said, with the auditor. So carrying on a business, yes or no? It's a scheme that acquired and raced horses, investors to participate in horse racing. So they were marketing it as enjoyment of experiencing ownership than a profit-making intention. No breeding activities occurred. They employed a manager dependent on third parties for all the horse-related, the purchasing, the racing. So the manager was just getting all third-party advice for it. The investors paid fees for the establishment, operating and compliance in training and upkeeping of horses. The income was the prize money and sale of the horse post-racing. and it generated a loss. So where do we go to next? Is the unit trust conducting a business or not?
All right. What do you all think? Scan the QR code or link is in the chat. We've got some people that have already answered it. Hopefully, well, I think this is a pretty straightforward one, but we shall see if there's a trick in the end there. Let's see what people have said.
Yes.
No, that's correct.
And think about exactly as we were talking before. Think about like owning a property, because we're saying the horse is a CGT asset. What are we going to do then? Yeah? Excellent. Oh, I was nearly about to miss that instead of that. All right. So let's continue on with our story. Where have we got to now?
Still at the paddock. What's happening in the paddock, Lisa?
We're now at Gisty. And look, there's no Slido questions. You can breathe easy, everyone, on that. But we just thought we better tick this one off, because there's been a few cases go through about mere agistment or commercial agistment. Mere agistment, of course, is going to be not running a business. Commercial agistment is running a business. So what is agistment? The act of taking another stock to graze, pasture on feed on land with an implied agreement to redeliver it to the owner on demand. Income derived solely from agistment will not typically constitute income from a business of primary production for tax purposes. So there's a quote talking about it. Agistment fees are in the nature of rent, is the way that this case with the Commissioner of Tax went through in 1995. I won't read it out completely. A recent case, which is DQTB, talked about a mere agistment, not carrying on a business. They were in a grazing business. They spent a lot of money fitting out the property, fences, tanks, dams, and things like that. The agistment fees was quite uncommercial for the part year. There was issues with that. There was no real documentation with the agistment. The other thing that said it was not a business was that they outsourced, a bit like the private ruling that we just talked about. Mm-hmm. They outsourced all the extra, husbandry vet to other people, to other professionals. They didn't do it internally, and they claimed a lot of deductions, right? And so what they did, it's a bit like, I always like bringing things back to what we know, like rental properties. If it's non-commercial, you can only claim up to the income of it. And that's what the decision was in that case.
Oh, okay.
And then for commercial agistment activities, the most popular case for that one is Hope versus Bathurst City Council. And they were looking at different things like the level of activity. So if you're doing it seriously, you've got some quantum and scale. And the purpose and intention of doing it is to make a profit from the activities. Even if the profit was small, if you could see the increase as the business developed, would make more money in the future. It was repetitive and regular, systematic way, and there was an existence of a business plan. Okay, so they're all the good attributes that we know and love from are you conducting a business? And that's what Hope versus the City Council. I did go through a few different iterations and went up through the courts, that case, but that's really where it settled on. The other thing that I'd just like to touch on with this one is just remembering if your client would like to access the small business CGT concessions, the land may not be an active asset as it excludes lands used in a business mainly to derive rent. So even if you are running a commercial agistment business, your client still might not be able to use the active asset because it's excluded from it if we consider that agistment is rent. Okay, so I just thought I'd touch on that one because I thought that was quite an interesting one.
Yep. Just letting you know we've just passed the halfway mark.
We are into the track.
Wee!
Farming stuff. We've got out of all our jodhpurs, and we've got out of all the mud and muck and our bloodstones, and we're now heading to the track. All right, turf accountants. For those of you that don't know, turf accountants are bookmakers. Quite cool, isn't it? Not bookkeepers, bookmakers. So we all know what bookies do. We go and place a bet with them on the horse at the races. They take bets and wagers on behalf of us.
They often wear a white hat. Stereotyped.
And Joyce is channeling her inner turf accountant. They're totally registered with the federal government. They can register if you go to the ABLIS site for business registrations and things like that. They say you can register them as individuals, partnerships and companies. You register them for 5 years. So that's all quite interesting. They've got all codes and standards as a profession, any restrictions placed on them, and registration by the agency. So I'm going there running the business. I'm pretty comfortable with that. It's everything that we'd expect them to conduct a business. So what I've just done now is pull up a little bit of Melbourne historical trivia, which was the Great Bookie Robbery. I had a lot of fun reminiscing about when we used to have newspapers and the Sun News Pictorial. My dad always said if it wasn't written in the Sun News Pictorial, it did not happen. And I think he was probably a social media influencer, but it had to be in paper. So in 21st of April, 1976, for those of you that you were alive, it was quite interesting. A gang of 6 stole somewhere between $1.25 and $16 million.
That's a big range.
A big range, right? And if you equate it, they said, someone did the maths and they said it's about $88 million if we put it into today's speak. Okay? And what they did is they met at the Victoria Club. And there's a pub now at the bottom. It used to be called the Turf Accountants. I think it's the Turf Bar on Queen Street.
Yep.
And what they do is all the bookies used to come in and they used to do their settlements because they're a business. Think about actuaries and insurance. You know how they cross cover themselves? Well, the bookies do that as well. If you put a big bet on, because Derby Day, there was a lot of smokies that came through. There was a lot of long odds that won. The bookies cross cover themselves, so they're not going to be out of pocket. They're running a business. They're there to make a profit. Okay? So what they do is they used to meet at the Victoria Club at the end of a set of race meetings, and they used to do all their settlements and cross bets. The money was transported by Main Nick. Remember that, I thought it was just interesting that we don't talk about cash very much at all now. And it was from a number of race meets. I think there was Geelong. I think there was 2 Caulfield race meets. And the money was never recovered and there was no convictions. There was some that got sort of convicted and then got let out. So it was all that sort of thing. And it was huge at the time, absolutely huge at the time. Anyone over the age of about 60 will tell you about it, especially if they came from Melbourne. And it was quite interesting. So my question for you now that I've told you the story is this one. Why was there a range between 1.25 million and 16 million for the Great Bookie Robbery theft?
This is the trivia question.
This is Lisa telling you more trivia than you really need to.
I think, Lisa, we should have let this be an open-ended question to see if anyone could have guessed it, but we shall see.
Sure, the amount. Yeah. And I just think it's really, it's just making people aware of what it was like in 1976, Joyce, because I do remember back then.
And by the way, Lisa is the trivia queen. You won a few things, like you won actual money, like big money from trivia.
Yeah, I did on the telly.
What show was that?
The Chase. I won money on the Chase.
Wow. So yeah, trivia queen.
That was a game of chance. Yeah, exactly, everyone. Exactly what happened. Because they were cash businesses. All the bookies wouldn't declare in their tax returns exactly how much money they had. And it's written up that way. This case was always, they didn't want to tell the ATO because if they said it was $16 million, the ATO would come and go, well, you declare all that in your tax returns for the past number of years because it was a cash business. Yes, and that's why they robbed them. Someone put that up as well. No one knew. It was, if someone wants to look it up, they came with machine guns and all that sort of thing. It was definitely an inside job, but hey, I don't know. Maybe we need a true crime podcast to do that, Joyce. But yeah, that was just an interesting one. And I thought it was more interesting with the ATO tax evasion angle, but also because they're called accountants.
Very nice.
So let's go to the people that don't like to eat. How are jockeys paid? Now, this is the Grenfell Jockey Club case, and it's just a little bit interesting, and we're probably going to more technical than we need to. But so Grenfell Jockey Club paid a riding fee to jockeys, okay, when they race at Grenfell. Let me just go through that. And this is in New South Wales. The rules of racing New South Wales said that all clubs shall pay a fee to jockeys or apprentice jockeys for riding a horse in a race or barrier trial, with the quantum of the fee being set by Racing New South Wales. So the Jockey Club had to pay the fees based on the rules of New South Wales. Then the owners and trainers, you've got a contract to ride in the race, exchanged for the riding fee with the jockeys and the trainers. And the balance between the Jockey Club goes to the trainers and the owners, and there's a contract to compete in the race for prize money. So there's a bit like a novated leasing type arrangement, isn't there? There's like a three-way thing going on here. So the question we've got now is, there's a riding fee, they're a contractor. What happens with the super, Joyce? That's what I'm asking. So are the jockeys employees for SG purposes? Yes, of the racing club. Yes, of the owners of trainers. What about both? Or no? Oh. Think about who's paying who, where the money's going, and who's actually doing the employing, if at all.
Because the money's coming from one somewhere, but then the contract with another person, so it can be a bit confusing. Yeah. And I think this was quite a big case. I mean, it was big to me. Like, I never knew this existed.
Yeah, and I think there was about another 6 jockey clubs that were really looking at it. And again, as a lot of our nuggeteers out there do, they know it depends. We've really got to look at the facts. That's why it's very hard to give tax advice at the pub or at the track or at the barbecue, because you've got to get all the facts to know what you're going to advise.
Right.
Yeah, I think everyone's done your monthly tax updates, Stuart.
Yay.
So it sounds like most of that 40% is pretty good. So that's the right answer. So what we're all looking at, employees of the Jockey Club, the owners of the trainers, and then if they pay SG, how much do they pay? So what we had to look at is a specific definition. I'll just quickly skip through this so we can get some fun stuff, and then I'll give you some tips at the end. But section 12 sub A of the SGAA that talks about paid for performance. And when this came out, Joyce, I remember us talking about, do we have to pay super on a busker? So if you give a busker some money, you know, if they're in the mall, you give them $10, you have to actually give them their SG on top of that as well, because of this same sort of case. And that's why we were having a bit of a laugh about it. So we're looking at those things. So that's the legislation. So let's just skip to a summary of exactly what happened in the case. So the racing clubs to pay the jockey riding fees was a direct payment as a result of an obligation from Racing New South Wales. But the Jockey Club argued that they were merely intermediaries and they were paying on behalf of the owners and trainers, right? Because that's where the contract was. But it was rejected as the New South Wales racing rules said that the liability for payment was with the club itself. Okay, so you couldn't just look at a common law. You had to look at the contract, and then you had to look at specific SG law of how it all works. They were looking for contracts in existence of substantiation and things like that. The jockeys were engaged in a race-by-race ad hoc basis, but the good thing that came out of it was the owners and the trainers didn't have to pay on top of that. Okay, so they only could pay for it once, and that's the way 12 sub 8 works. That it means that only one person can be liable at a time for payment of the same performance. Okay, so that's what was good, because we thought, well, do they actually get twice as much SG because of the contractual arrangement? Yeah, and that's what I was really worried about.
Can I just check? So this is not an employee versus contractor issue, right? So the jockeys are definitely contractors, but even so, because it was a contract for performance,
yes. So
whatever
like that special subcategory, like the extended definition of SG as we talk about. Yeah.
Yep. So definitely keep a lookout for that.
And that's why we could think about buskers or anyone we pay on that sort of basis. It's the same sort of performance. And if you have any performers, you sometimes find that they'll send you an invoice and the SG will actually be written into their contracts of who has to pay it. So it gets, I'm sure some of you do that, especially with like presenters that come out and, hand out your cocktail drinks and things like that and how they get paid, especially if they're celebrities as well.
Wonderful.
All right. So professional gamblers, we have to cover this. Let's go to Flemington. So professional gamblers engage in horse riding gambling systematically with the intention to make a profit. There's some cases there that we talk about with how gamblers, the factors, we're looking at systematic business-wise manner, the scale of the activity, the size of the wins and the losses, whether the betting is related to other activities of a business-like character, such as breeding and horses. That interplay, of course, is all going to be carried out. The motivation of the gambler, profit or for pleasure. The form of the betting chosen. Is it chance or you're doing it in a systematic way? Are you betting on multiple horses all in the same race and trying to work the odds so you'll always get a payout? That sort of thing. It reduces the chance. Always putting $100 on the nose would be different. And it's always coming down to, are you doing something that is more like a pastime or are you doing it more business-like? And then the winnings are assessable and the deductions are deductible under 8-1. And
That's so interesting. Just a quick question to the audience. Have you ever done the taxes for a professional punter? And I wonder what that looked like. Very interesting. I certainly have not come across.
It'd be very, very rare. Because again, with punters, you usually hear about their winnings. Oh, someone has. Excellent.
Right.
You usually hear about the winnings. You don't hear about their losses. So if Stephen says that, did they get taxable income or have they got losses? That's the question I've got, because most people do have losses, as we know. Who makes money? The betting establishments. Okay. So now we're at the track and we're now playing at the track. We've looked at the turf accountants, we've looked at the jockeys, and we've looked at the professional punters. Okay, let's have some fun about what we're going to do tomorrow. So let's look at sponsorship. Tax nugget stakes. That's what we're going to do. Joyce and Ross have said, yep, I reckon we should sponsor race.
Race
like that.
8-1.
I couldn't help, but I just thought, I've tried to make fun. So the Tax Nuggets Academy sponsor one of the races. They believe that the exposure will benefit business in the form of advertising. It will make more people come. It will generate future income. And as we know, Joyce always puts out on social media about our ARRs. So that's going to increase. So she says, that's my justification for sponsorship. So the question we've got is it deductible?
Is it deductible for tax nuggets? This should be an easy one. Don't worry, I won't take it as tax advice. I will get Lisa in there as a celeb to come over. All right, let's see what people have said. It depends.
I'm pretty okay with yes, or it depends. So let's have a look at what the rules are. That's all I wanted to do, right? So it's highly likely, and this is why, right? It's Joyce and Ross, right? It's the tax nuggets people that determine the nature of the expenditure to be undertaken in the course of their business, right? Because it's 8-1, running a business, it's necessarily incurred. That's your call, Joyce. The advertising expense to enhance the income-producing activities are not excluded on the basis of it being capital or private or domestic in nature. And there's two cases, Snowden Wilson and Magna Alloys. Now, for those of you that have done a little bit of tax law, remember, these are cases that we've covered, but let's just apply it to this case. It is the taxpayer who decides whether the expenditure is dictated by the business ends to which it is directed. So it's your call if you can argue that. For practical reasons and within the limits of reasonable human conduct, it is for the man who is carrying on the business to judge, man or woman, I should say, should be judged on what outgoes are necessarily incurred. So necessarily incurred is deliberately broad. Go for it and argue. And so I didn't mind that in terms of it depends or not. So let's continue on. Let's have a quick look at the nursery car park. So Tax and Academy booked a car park at the famous nursery car park in Flemington. You cannot see the track from there, trust me. And a lot of people don't even see a horse. They just look at it in the big screen. They might as well be in any backyard, but it is the place to be. Fully catered with gourmet food and bevies and lots of bubbles. Employees and clients get invited. So just let's tick it off. Entertainment is non-deductible. Entertainment means anything food or drink or recreation. Yeah? So clients non-deductible. Employees are going to be subject to fringe benefits tax. So just remember what we're doing here. FBT, there's no entertaining fringe benefits category. Remember, you need to work out the category to work out the taxable value. So it could be meal entertainment, it could be property, it could be expense, it could be residual. If FBT is paid on the expense makes it deductible, and also fringe benefits tax is deductible. So if you want more information, Joyce, I think that you've ran a very, very fantastic FBT series with Paul Mather that is great, and I strongly encourage you to go through FBT in great detail with the, can I say, the godfather of FBT.
Thank you. Yeah, so Paul Mather's FBT accelerator program is on our catalog, so feel free to check it out. So yeah, not enough time to cover FBT and do it justice today, unfortunately.
And that's why I just sort of touched on it. We do need to deal with it because it fits in, but I think there's more interesting things that we can cover because we can cover FBT under your other program. So what about the occasional punter? There's Vicky. I asked for a photo of Vicky looking splendid, and there she is. So,
Assistant Nugget, did you do a face swap? Is that what you did?
But I just asked for a photo, and that's what turned up on the slides.
That's awesome.
The face swap. Excellent. So, Vicky Tang, who's on holidays. Yes, Joyce lets her go on holidays, is having a fabulous day at the Cup. She rarely bets on the GGs. She has a flutter when she's at the track. One of the regular attendees is our infamous Dallin, who always asks questions. I don't know if he's on today, but yes, I've dropped Dallin in it, and I know he's got a good character to be able to do it. He said he's heard a whisper. He says, race 6, horse 5, windfall gain. That's the horse, windfall gain, at 100-1. Sounds like a good bet. Vicky's a bit sceptical, but she put $100 on the nose with the bookies at the track. Windfall gain led all the way and won by a length. Vicky was elated and cantered all the way to the bookmaker to collect her winnings. She said to the bookie, I'm a tax expert. It's a windfall gain. No tax on that little beauty. He still hasn't decided whether she's going to cut Dylan in on some of the prize money. So, is Vicky a tax expert or not? Are we happy with Vicky's position?
All right, this is a bit of a fun one. Get involved, people. So do you agree?
Fun at the end, Joyce. We try and make it a bit fun. We're only here for trying to cover all the punt sort of stuff, so it's all good.
Do you agree with Vicky's position that it is a windfall gain and therefore no tax? Let's see what people said. Yeah.
We've got some smart people out there, most definitely. Yep. Okay. So why is this? Gauging and betting for recreational purpose for excitement and enjoyment. It's a game of chance. So what are the factors? And these are the cases that we've pulled out the factors to try and say if you're a professional punter or just an occasional punter. So the volume and extent is sufficient to characterise as being addicted to gambling, but lacking the systematic and organisation. So just because you bet big, if you don't have the system and you're still relying on a game of chance, probably not. If you're retired and you spend a lot of time, does not turn a pastime into a business.
Interesting.
Keen follower of the turf, but the turf is not a business. That's another quote from one of these cases. Indulging in betting, not so considerable and systematic and organised that it could be said to exceed the activities of keen follower of the turf. pursuit of a pastime, however vigorous the pursuit may be, it does not usually amount to carrying on a business. So yes, we're all good with Vicky's discussions. But let's just move on. So Vicky's winning a rather nice amount of money. She's worried she's spent it. Vicky's okayed these slides, by the way. She okayed, and I can say this. I think I know.
Paying her royalties.
We do? Yeah, exactly. So on the way home from Flemington, she deposits into the ATM. It's now sitting in her bank account. There's an audit trail of the deposit. Everyone agree?
Ooh, where is this going?
Months go by and she lodges her tax return. The ATO come back and question about the deposit on Cup Day. They ask whether it's assessable income or not. How does Vicky respond? What could she potentially do? What is she going to do? She's going to provide evidence? Or is she just going to say, go away, it was Cup Day, it was a windfall gain? They don't know whether she's a professional gambler or not because it could be on the side. So what are they going to say? She doesn't know. Could the money have been given by Nuggets as a bonus in cash? Who knows? So the question I've got for you now, which is always one of my favourite ones, is who has the burden of proof, Vicky or the commissioner? Does Vicky have to prove that it's not assessable income, or does the commissioner have to prove that it is?
Let us know what you think, people. I think this is the last slittle, isn't it? Oh, no, we've got a couple more.
All
right, moving along quickly. Yeah. So Vicky majority has said, which is correct.
Great. So that's what it is. And we'll just quickly go through. This is a recent case of Yusuf, and it was about unexplained money in bank accounts. They gambled a lot, but they also ran a concrete businesses. Tradie, cashies, you know where it's heading there. They were a prolific gambler, but look, it went through the courts and they weren't great witnesses. And they just didn't keep enough records or anything like that. Okay, so just thought that I'd touch on that one. So the burden of proof that the assessment is excessive or otherwise incorrect and what the assessment should have been is on the taxpayer. The taxpayer has to prove that the assessments were excessive or incorrect and correct taxable income. So just bear that in mind with anything that goes into the bank accounts and things like that. And that could be gifts from overseas as well. It gets picked up by Austrac. So I thought I'd just touch on that one just to be very clear as well. So now we've got our influencers. We've got our 4-day racing carnivals. We've had Derby Day. We've now got Cup Oaks and then Emirates Stakes Day. So Phoebe, there she is, getting ready for Cup Week. She's going to all 4 race days. She's a true Melburnian. She's in her 20s. She just says, I'm loving getting dressed up. So she's got a full-time job as an accountant because we're all funsy. She spends time posting on media platforms. She puts her looks on TikTok for likes. You get likes on TikTok? I don't know. But anyway, I just couldn't. I like the wordplay. She also is ambassador for a few brands. She gets discounts off products. She gets free product if she tags whatever the name of the business is, and she puts Phoebe 2024 at the checkout and people get discounts and things like that. There's a dress code, as you may be aware of, for all days of the carnival. Derby Day was black and white. So she's got to make sure all her outfits are on point and they're all different. They're all going up on the Insta and the TikTok and things like that. The business she provide most of the attire for her, and she posts relentlessly. So she's basically a brand ambassador. She enters fashions in the field, and she sometimes wins gift vouchers to Myer or whoever's sponsoring them at the past.
So serious business.
Has she got tax issues?
All right. What do people think? Does she have any tax issues in relation to the scenario that Lisa has just mentioned? Thank you for voting, people. Ooh, it depends if she's running a business, most people have said.
She sort of has, because she's got a pretty much stuff as bartering. And this is what the ATO are really getting down on, you're really focusing in on now, is influencers' income when it's bartering transaction. So any form of income and any form of bartering that you get, because she's running things in a systematic way. She's doing it. She's routinely doing it. She's spending a lot of time on it, all those sort of things. Okay, so she does need to bring in the bartering aspect of getting things for free if she's going through things in a systematic way.
Yep. So is she carrying on a business, first of all?
She probably is, Joyce.
Yep.
I would say she's probably is. That's how I wrote it. But again, I've got a slide on that. We'll just also, if she's doing Instagram, she could be, I'll do income and then I'll do deductions because that's where it comes into deductions more than income, okay? So personal exertion is going to be income, regardless of whether it's a business or not. It's to do with your deductions, okay? So what we've got here is they could be a special profession, the influencers, because it's starting to be a bit like an arts business and things like that. So they could be a performing artist. The definition is intellectual artist, music, physical, personal skills. You've got an audience. You appear on film, on tape. Isn't that what TikTok and Instagram is? Isn't that what YouTube is? So it could fall into that. Production associate. What happens if you do the production? You know, you're on any sort of, or go to the OnlyFans or Twitch or all those sort of things as well. They're now coming into, are they a special profession? Because then you can do income averaging. And this was a ruling that came through, just mindful for time. This is a ruling that came through where this person was making money on Instagram. And they were considered to be a special profession, which means you can do income averaging like sports people and those sort of things. So I thought that was quite interesting. But let's just now look at the deduction aspect. And that's where we need to look at it because Phoebe's earning accessible income, whether it's bartering or prize money or if it's convertible to cash and those sort of things, right? So we're saying she's earning income, it's going to be accessible income, but it's going to be depending on the deductibility. So we'll give one example of this so we can make a bit of a distinction. Phoebe could not just get the right hat to complement her outfit. She approached a milliner, that's who makes hats, and she wanted to wear a specific one that was going to complement her outfit. They wouldn't budge to be a brand ambassador, so she actually had to pay for it. She was quite annoyed, but it really set off her outfit. So can she claim a deduction for the hat? Yes or no? So
right,
yes.
get involved, people.
Yeah, yes, no. It depends if she's running a business. It depends if there's any private component. You need to quiz Phoebe in more detail to find out what's going on.
Well, if I was a betting woman, I would say depends if it's private, other private purpose. Let's see what other people think.
Yeah.
Couldn't give you a bit more.
I think we've got to quiz her more. But anyway, I just put those sort of things. That was my comments. I just wanted to have a bit of an idea of what people thought. No, she can't claim a hat. Well,
Most people think, no.
Yeah,
I think it's private.
well, it depends on what else she's doing with it. And that's what we come down to. So let's have a look. Is she running a business or not? She could be, or she might not be. We've got to I haven't given really enough information, Joyce, but just think about it. We've got the two limbs of 8-1. We've got, you're going to be earning accessible income to be able to claim the deduction, or is it necessarily incurred?
As a business.
Yeah, so you're looking at the real connection. It's not enough to show that there's a perceived connection, general link or a causal. It's got to be a real connection with it all. Expenditure must have had a close connection to the performance of the duties and the activities through earning income. Should not be approached narrowly and requires consideration of the task to be performed and the duty to be observed. So the question is she there purely to get likes or is she there for enjoyment? And then what else is she going to use that hat for, which is the private purpose, which is what you were looking at as well. Now, the other issue that we've got with this is it's probably PSI.
Mm-hmm.
And if it's PSI, it's going to get knocked down to the first positive limit anyway, isn't it? Because remember what PSI does, it's mainly for award for effort and it's going to limit to the deductions as if an employee.
Mm-hmm.
So it's probably going to get knocked out on that and it depends on what else is she going to do with it. So let's just look at where you can, because our gut feel is no, always, right? Because there's a private component when there's a matter of pastime or enjoyment involved. So there's specific guides that the ATO have on these sort of occupations. So is she a performing artist? The other thing I didn't mention as well, remember that if she made a loss, it's going to be subject to the non-commercial loss rules as well, if she's operating as an individual or a partnership. So let's see what other things the ATO say about grooming in this tax ruling. They say a deduction is generally not available for grooming expenses such as hairdressing, makeup and facials. A deduction is allowable for the cost of a particular hairstyle if an employee performing artist is required to have a particular hairstyle for a role. So if she got her hair done, was it specifically for going to the race day? And then, is that what she had to have and that's how she promoted herself? So we're getting through to this bit of a grey area. If it was a role where you went to someone at a theatre, that's quite established. But where does this influencer link to? And that's why I put up the private ruling on averaging for influencers, because they said, yeah, they're professional artists. So where does that live with it all? And then I put up other things that you can claim expenses for as well, because it is a really hot area for the ATO. So again, you've got to really understand what Phoebe's business is and how she's going to use that item.
Just letting you know that we're at time, but I think you just have one last slide.
So one more slide. Let's look at our tax nuggets tips for race day tomorrow, Flemington race 7. I have picked 3 horses. Absurd. I think you don't pronounce the E, because I reckon that's what the new TASA code of conduct could be. 1 smooth operator. I reckon that's what we hope for when we ring 137286. And there's a horse called Interpretation.
Is there?
Haven't say reform. So that's my hot tips. Now, please note, you need to gamble responsibly. The chances are you're about to lose. You win some, you lose more. I've put all the taglines on. What's gambling really costing you? What are you really gambling with? And the one for us, this is not financial advice. It's ours, right? So I pulled them all up. Yes, it's pretty bumpy.
Yeah, I certainly learned a lot. So I know we've gone over time a little bit, but are you okay to take a couple of questions, Lisa?
Here we go. We've tried to make it a bit fun, haven't we, Joyce, today? So
I had heaps of fun.
That was my scope, everyone, to try and keep it as fun and frivolous on the day before Cup Day as we pretend.
Yeah. Nobody wants to do any work today. Please, just ease us into the public holiday.
You've had a bit of fun, hopefully, and you've learned something. So there we go. We've got Joyce. Anything we can chat about?
We've got someone asked if 20 mates and I have bought shares in a horse to race them as a hobby, and we've been doing this for ages as a hobby and, never claiming any deductions. We have a few small wins, but nothing much. This year, however, we win the Melbourne Cup and the Caulfield Cup, but no change in activities. Is this still a hobby and not accessible income?
What do we think? Probably is still a hobby, we think. What it is, your intention was definitely just to have a bit of fun. You own a unit in a horse, you don't own part of the horse, otherwise you've got capital gains tax to think about. But apart from that, I'm thinking I would think it would still be a bit of fun.
Mm-hmm. Another question I have, this same person has asked is it ever possible to have a hobby with a friend, or is it automatically a tax law partnership and therefore a business and therefore accessible?
I think you can have a hobby with a friend.
Yeah.
Absolutely. I like those questions, Joyce. Just chime in, because we're thinking about the same sort of thing. I reckon definitely.
Yeah, it's more how you go about it, right?
It's how you go about it. You can have 2 individuals in partnership, and they're both. It's a partnership in terms of name only. It's going to be friends. Yeah.
Mm-hmm. And last question is from Debbie for the bookies. Given they have registrations and rules, etc., assume they're operating via an entity, will they fall into the profits from professional services activities rules?
Oh, you mean like the
The PCG thingy?
PCG thing? Are they a professional? Good question. They act like a profession, but are they a professional? Is it more like a? I don't.
They're not
know.
really personal services income.
It's definitely PSI. But do they? You were talking about the PCG 2022, whatever it was, about professionals.
Yeah, the one with the color coding.
Yeah, the color coding, the traffic lights that were ridiculous. I can't remember what number it's PCG 2022-something. Yeah, I don't think so. I think professional means you've gone to university and you've got an association that looks after you. But they do act like they are organised and they are registered. So they're as registered as much as anything that's registered. I would think of like a cafe, it's got to be registered under the Health Act and things like that. So probably my thoughts would be no. A good question. I loved it. Someone helping me with it? I think the lobbyists is saying not.
Yeah, the lobbyists, of course, would say that they're not subject to the PCG according to me.
But a very finite list. It's basically saying architects, medical
engineers, accountants,
lawyers, all those planners, all those sort of things. It's that sort of gone to university and got a qualification more than bookies who learn from. It's more of a trade they learn from doing, but they are registered. But really good question.
Wonderful. All right, that's all the time we have left for today. Thank you, everybody, for staying back a little bit longer to get through all the Q&A. And thank you so much for joining us, everybody. Please thank Lisa and by putting your emoji hands together one last time. Thank you very much, Lisa. Thanks, everyone, for joining us.
Thank you. Bet responsibly, everyone. Cheers. Thanks very much. Cheers.
Bye.